You know, at the risk of suffering a little bit and losing a bit of the man card, as they used to say. Can you still say that? Man card? Yeah, the man card. I had to look up the song to see what song is stuck in my head. Janet Jackson. I don't know why. In my head, I keep going, bam, 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 bam. Oh, you nasty boy. That's it. It's stuck in my head. I don't know any other part of the song, but I've been walking around all day going, bam, 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 bam. And then the earlier, you heard me whistling, I was whistling Inspector Gadget from back in the day, the cartoon. Dun, 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 dun. I think I even went woo, woo, once when I was walking through the hall. No. Bum, ba-dum, ba-dum, bum, bum. I don't know. It's all. This is a case of the Mondays or something. Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there today? Good to see you. I can't see you. This is the way it is. Welcome to our show. We're financial advisors here at Jazz Wealth. We need new shirts, actually. Baby Jazz is supposed to be working on getting us some new shirts. I wonder what happened with that. Anyways, we're going to talk about the stock market here today. I got a lot of good stuff for you here, so I hope you'll stick around and hope you learn something. That's what we like to do here. Wine and Wealth this week, we may have a special guest. Our new advisor, Eric, may be joining us, but we're going to talk about taxable and non-taxable accounts, taxable and non-taxable gains in your taxable accounts or your individual accounts, your brokerage accounts. So many misleading. I got on this tear watching YouTube over the weekend. There's so much misleading information. And that's the beauty of this. It's either this or it's not, right? So we're going to go through all of it because there's no opinion when it comes to how you're taxed and all those little tiny positions. People get confused when it comes to options. What's the wash sale actually mean? Do you lose the loss if you buy the stock back? Oh, no, people. Anyways, as far as the stock market goes, I've been a little bit negative lately. I understand that. I saw the comments there. And I'm not trying to be negative in terms of, anti-American or bearish against the market. It's just the world we live in right now. We are what would be considered late cycle. So if you ever follow the economy, economics 101, this is the cycle of an economy, right? We are what's known as late cycle. We're at the end of the cycle there. Every analyst out there would agree, except for the perma bears and perma bulls. But that's where we stand. So I just want you guys to be careful about investing large sums of money. If you look over to the right-hand side of the page, you see the stock market, how it has started off the week. Quite bearish, actually. We started weak, and then we continued weak. So if we look at the, we'll start with the S&P here. Comfortably back below the 200-day moving average. We stopped at the 50-day moving average today. And like I said, today, if you were to follow throughout the day, if you happen to be one of those people, if you look back, right here is where the markets actually opened for the day. And we basically started down from Friday's close and then just continued lower, took a break through lunch, continued lower into the close. So very much a bearish day. There was very little sign of buying out there. And what's interesting is the big names. They're the ones that hurt you, right? So these guys haven't been able to make up their mind. The more heavily weighted stocks, like Microsoft, is one of the biggest stocks in terms of weight in the S&P 500. That one finally broke down here today. You had Apple. No, I'm going to type it over here. You had Apple breaking the 50-day and now finding itself just about halfway between the lows and the highs. So Apple has now given back half of its bear market bounce. That'd be the fun way to say it if you want to sound smart in front of your friends. A lot of names look like that, but some look worse. NVIDIA has now given back almost all of its bear market bounce, right? So a lot weaker. In fact, semiconductors are one of the weaker areas yet again in the stock market there. As you look around, you're going to see that those stocks that have the biggest weighting on the market, they were the ones that were hit today. But something different today compared to all the other days last week. Other stocks decided to join them, right? So there was weakness more across the board today. It was rather interesting. Disney, even weak on the day. Not so bad, but about to make new lows, it looks like. Today is the today is the third anniversary of Disney Plus. So if you happen to be one of those people, they got 118 million users over the 3 years there. But the stock is actually down since they started Disney Plus. So if you thought that was going to help make the stock go higher, it hasn't worked out just yet. Disney's about to make new lows there. If I look around, though, keep in mind, I was talking about this last week. I'm going to Just keep emphasizing it. You have AT&T, right? The split hasn't adjusted yet here on the stock price, but up on the day. Verizon, up on the day. Okay. General Motors, up on the day. That's kind of interesting, right? We're looking around at some of these other names that may fit into the same category. Philip Morris, Coca-Cola. Okay, something interesting there. What about Tyson? Names that don't get a lot of attention in the what's known as consumer staple space. The defensive names, the stocks that can weather an economic downturn. So that leads into the same concept as the stock market or the economy is in a late cycle. We're in the late cycle of growth. And people realize that, or you get a hint that people are realizing that when they go buy the defensive stocks, the consumer staple stocks, the cigarettes, the alcohol, all the stuff you're going to buy whether the economy is doing good or bad, right? Pepsi, another one. I'm buying Pepsi. I don't care where the economy is at, right? So that's the stocks that are getting all of that attention right now. So keep that in mind, right? If we look over across the markets today, basically everything was lower. Russell 2000 was lower on the day. The Dow was lower on the day. It did not participate quite as much as the other indices, and in fact was positive at one point when the market was down. You got crude oil down another 3% on the day. That's good news if you want lower oil prices. I do. And you got bonds lower as well. Take a look at this. So you got bonds hitting new lows again today, and you know me. I'm a data-based guy. I'm not a emotional guy. I like to make decisions based on data. Well, if you were to look, let's take a look based on data here. If we look at the TLT, we now have over a 10% drop in 30 days, just to add to what it's already done. So I use the research site if you want to join, jazzwealth.com/research. And in our office trades today, we say, well, how often does that happen? I actually looked it up. 43 other times in the last 25 years has the TLT fallen 10% in 30 days or, over 30 days, right? Average return is a small bounce, and median performance is also a small bounce. It's positive 67% of the time. I say, well, hey, I want to do a trade. And so we did a trade in the office trades today. And I said, well, I'm not interested in all this stuff because we used an option for doing this. And we said, well, we have 39 days left to go until that is done. And so we said, well, okay, well, should we look to be long on the TLT? And I said, well, I'll just think it through, right? So throughout the day here, I kind of looked up some things. Here's what we have. In the May expiration, 39 days from now, after falling 10%, we find the average bounce 1.67, median 0.88. The worst drop is another 2%, basically 3%. The best rally is 6%. Percent of the time that it's positive, 76% of the time. So when you look at bonds right now and you say, oh my God, they're so beaten down, yields are sky high, that's incredible. Well, what are the odds that continues? 24%, right? It's not very good, especially over the next month and some change. So always keep that in mind when you're looking at something that looks to be like a waterfall, right? I mean, it's off the chart. You can't even see the bottom of it. Ask yourself, how often does that continue? If you're an Office Trades member, of course, you can join us there. A research member, you can use that. It's free. You can actually look up any symbol you like. And so that helps you make decisions based on data rather than emotion, because there's a lot of emotion in this symbol right now, especially in bonds. But nonetheless, you get what I'm talking about there. Oh, also I want to point out Bitcoin. Bitcoin lower here as well, another 7%. It's a volatile product, right? So you got to be comfortable with that if you're playing along in Bitcoin. And most people are. I find that most people aren't really they don't really care too much there. But that's what you got going on there. Also, the Fed limiting their balance sheet, right? Or trying to roll off their balance sheet. I got a lot of emails about this. The Fed is not actually selling bonds, by the way, in case you didn't know that. The Fed minutes actually showed last week that they want to reduce the balance sheet by $95 billion a month. And you think, oh my gosh, they're going to sell bonds and that's what's pushing the prices lower there. Well, actually, they're going to close $60 billion in treasuries, which are the short-term bonds that we were just showing, and $35 billion in mortgage-backed securities. That's their goal. Now, the treasuries that they have, those are short-term notes. They mature in 2 years. So they're not going to sell those. They were actually very clear to say, we're going to let those run off. That's the fancy word of them saying that there. Meaning they're just going to mature and they're not going to buy new ones. So the idea was they want to ramp this up to $60 billion a month in treasuries and eventually go beyond that there. If they were selling, then that would really drive down prices and really increase the yield. They're not selling, right? So don't misconstrue what they said there. They're very clear about this. There's one catch though. The $35 billion in mortgage-backed securities, where are my notes here? Those they're going to have to sell. Mortgage-backed securities don't mature in 2 years. They're long dated. They're very long dated products. So they're going to have to sell some of those. The issue there is that's going to create a liquidity issue in the mortgage-backed securities market. What does that mean for you? It means that it's going to be a little bit tougher to get a mortgage, and increasingly tougher to get mortgage. The standards are going to be increased there. Now, if we look at the Fed minutes, they say that that part of the process won't take off until the runoff of the treasuries we just talked about are well underway. And so all we can do is guess what well underway means at the moment. Most analysts say that late 2022 to 2023 is when they'll actually start having to sell off some of their mortgage-backed securities, which is going to make the mortgage market a little bit difficult there, right? So just a heads up on how that works. I just wanted to point that out there. By the way, the Fed actually means this, right? So they mean it when they say something. Think about it. When was the last time the Fed said something and then did not do it? So on TV, you hear them say, the Fed is signaling that they're going to raise rates, lower rates, whatever it may be. And that's exactly right. They let you know well ahead of time. It's just a matter of, will you listen to them? Will you read through and see what they're trying to do there? Will you respond, or are you going to get run over because you can't beat the Fed there? So think about that. When have they said one thing and done the opposite? They are now saying that, and even they kind of commented on the markets. They don't normally comment on the market. They are now saying that it does not matter what happens to the market. We are going to raise rates. They keep throwing out that 50 basis point raise that they're all talking about. They're doing that to get you to think about it. We're going to do this. We're talking about 50 basis points. We're talking about raising rates 50 basis points. They keep saying that so that it's not a shock when they finally do it. They mean it when they say they're going to raise rates, and that's coming from them. That's not an opinion. That is their actual words coming from them. All right, so heads up for that one there. What else do we have here? Yeah, that's all I got, actually. Let's move on. So if we look at the charts, I've still got Bitcoin set up, volatility perking up just a little bit. It's also the beginning of earnings season starting this week, so that's going to be exciting there. If we go over to new highs and lows for the day, just think about this for a second, right? And I'm going to go, hey, that's not supposed to be there. That's supposed to be right somewhere right in there will do the trick. I'm just a little bit picky on how that goes, so bear with me. Anyways, new highs and lows. I want to point this out. There were 9 new lows, right? And this goes back to the same thing that we're talking about. There were 34 new highs. The companies in this space could tell you a lot. So first, let's go to some of the new highs here. Coca-Cola, right? The list is just dominated by these names. Why would Coca-Cola be doing so well if the economy is doing well? I mean, it's not a cyclical stock, right? It's a defensive stock. Altria, they make cigarettes and you know, the vapey thingies. They hit new highs today. Why would they do so well? The dividend? Maybe. Why would you want a dividend if you could go get growth in these amazing stocks that are offering growth? Think about that. Everybody's mindset right now is, I'm going to go get the, I don't want to say guaranteed, but I'm going to go get the consistent dividend. I'm going to get the slow-moving stock that everybody's just going to go buy their products, even when the market's not doing well, the economy's not doing well. Hershey's, I'm in. I'll buy some Hershey's. It's a consumer staple stock. Why is that hitting new highs? Why are all these stocks doing so well? Hormel, a lot of different products there. That one's hitting new highs, consumer staple. And as I pointed out earlier, look around at everything that did well today and did well last week. Those were your best performers last week. So you got to be careful with what the world is telling you, right? Dollar General hit a new high. It did start to pull back, though, but this is another consumer staple. Dollar Tree is another one. What's going on? Why are they doing so well? So you see how throughout the sort of analysis, you don't have to have an opinion on the market. You can have a very clear picture of what everybody's doing. Now, are you one of them? Or do you just go, no, I'm going to stick with my Microsoft and my Alphabet and stuff, my 5 big names, and, you know, it's just going to be fine. All right, over the long run, you're right. You're going to be just fine. But right now, everybody's telling you, going for safety, right? I'm not messing around with those growth stocks. I see what's happening. Stocks in the news here today. Walmart. I believe today, if not, well, today or Friday maybe, 50 years that Walmart's been on the New York Stock Exchange. Bit of an anniversary there. Also, Walmart hit new highs on Friday. Very strong. Wonder why that is. I'm going to shop at Walmart no matter what the economy does. They have good deals, right? Think that's the mindset. You've got KB Homes. They said we're going to buy back $300 million in stock, which is about 10% of the total value of their company. So they see a cheaper price. They see they've got some cash. We're not going to go build new homes. That's too risky right now. Think about what they're even saying. We don't want to take $300 million in cash and go find new land so we can build some homes or build homes for other builders. We just want to buy back our own stock. It's cheap. It's less risky than, in fact, going and building houses right now. Lowe's in the news there. They got a new CFO, and they did mention guidance for the full year was going to be as expected, which was not great. They did not guide very high, so that's why the stock's not doing much. Shopify in the news there. They're going to split 10 for 1. Yeah, 10 for 1 stock split for Shopify. The new stock will be worth about $61 once that takes over. So that's good. If you ever like to play Shopify and just didn't like the price for whatever reason, now you can play along. And Twitter, Elon Musk not going to join the board apparently, and that's probably because he wants to get more shares, or we'll find out that he did get more shares because if you join the board, you have to be limited, and I don't remember the number. It's some weird number, 10%, 15%. You just can't be more than that for a shareholder of a public company if you're going to be on the board. I can't remember what it is for the life of me, but there's a number, and that's probably the case, is why he's doing that there. Also, he's been picking on Twitter a lot, so he's not stopping. Okay, one last thing. We've got earnings season start. What is the focus of earnings season this season? I always try to point this out ahead of time so that you can see beforehand rather than me say, I told you so. That's what they were looking at. This earnings season, the focus is on who is, and this is not my opinion, who is handling inflation and who can actually grow during a late cycle economy, right? And maybe a possible slowdown there. So what are we looking for here? You're looking for stocks with pricing power, right? Think about that. That's the key term. Anytime you hear anybody talk about pricing power, that means that they can hold or raise prices no matter what, basically. Higher inflation, economic downturn, they can hold or raise their prices during that. So consumer staples, right? Think about companies that can do this. If you're looking through a list of stocks reporting earnings, where do you find names? Well, you can find names that have very little competition. Market Access comes to mind. MKTX is a ticker symbol. They've been beaten down quite a bit, but that's a company that has very little competition. It's a bond trading platform, and there's not many people that want to be in that space, so it's considered sort of on its island, or they call it a moat. They have a moat there. It could also be companies that are innovating. Walmart, believe it or not, is innovating right now. You've got Merck, NVIDIA, right, with all the cloud-based stuff they're doing, and Web 3.0 and all of that. Chipotle has been able to raise prices during COVID. They were able to raise prices after COVID, right? McDonald's was able to do the same there. Restoration Hardware, right? So it gives you an idea. You want companies with pricing power that show that they're able to raise prices and do that. The easy way to look this up is when you look at their margins. If their margins are not declining, that means they're able to hold or raise prices going forward. If their margins are actually declining, that is not going to be a good sign for them. So I put together a list. Here's the beginning of this week. Here's all the companies reporting earnings. You want to take a look on there, you can. It's also in the notes from Jazz, email that we send out to all of our clients. We are starting off the week with bank stocks, right? So you got JP Morgan will get some attention there. You're going to have Citigroup. You're going to have Goldman Sachs, Morgan Stanley. Interestingly, Goldman Sachs has the best rating in terms of how often they beat on earnings. You got Morgan Stanley, PNC Bank, State Street Bank, and U.S. Bank with Wells Fargo towards the end of the week. You're also going to have some interesting reports, I believe, from Progressive, Delta Airlines, and BlackRock. Where'd they go? There it is right here. And this is the big list of stocks essentially that are reporting. As we get into next week, the list will get ever longer and longer. I've also included their beat rate, how often they beat on earnings, how often they beat on revenue, and the performance throughout the day. Do they tend to gap up like Morgan Stanley, averages a gap of 1%? It tends to fall a little bit during the day, but ultimately finishes the day positive. And this is volatility. Your most volatile stock is Bed Bath & Beyond. Your least volatile stock for the week is going to be U.S. Bancorp. Usually doesn't get all that much attention. And so you could screenshot that if you'd like and keep an eye on things as you go. But I just wanted to share that with you. Yeah, that's pretty much it. I rambled a little bit, but I was, moving kind of quick there. Tomorrow we'll do the sector snapshot, sector update. We'll talk about some of those things there, but I'll take your questions now If you have any questions, I'd be happy to help. 14.9, I believe, is the accurate one. They cannot be over 15%. That makes sense. You're right. Pavan gave us the number there. I believe it's 14.9 because you cannot have 15% ownership of a stock and be on the board at the same time. Thank you for that. Yep. Oh, man. Uh-oh, somebody buying a house, trying to help somebody out there. Yeah, I love it. Lucas, I notice your stock picks are not defensive stocks. Well, on the office trades, yeah, we're just trading. Yeah, that's just fun, playing things along the way. There's no rhyme or reason there. We're trying to actually move the whole account. We're not, whatever stock's got to be in there. We're having short-term fun there. Kirk says he's starting a business, and because I bought another property, I will be renting for the first 2 years, but I'll be buying after. There you go. Renting is paying someone else's bills, retirement. Yeah, but there's nothing wrong with renting, right? Especially in different points in your life. I did the same, I don't know, a couple years ago. I didn't know what was my daughter going to do for college. Is she staying? Is she going? Is she going local? Or I don't know. So we said, well, let's just rent just in case we might have to move or we don't need to buy a house. Maybe we buy a condo or something. And we did, and found out, well, she's still here. So we ended up buying a house. But yeah, I mean, don't think of renting as always stupid, right? No way. It might be more costly now, but so is everything else. Andres, if recent rally was just an oversold dead cat bounce, is the market going to break recent lows or spy test the 400 in the coming days? I don't know. That's where we stand right now. The market has pulled back to, is the glass half empty or is it half full? That's exactly where you're at. And it's a pure guess. Now, I would say that the big stocks, Microsoft, all the ones I was showing earlier, your heavier weighted stocks are now getting oversold. So another little move lower and those would be oversold in the short term. And if those get a little bit of a bounce, that's going to stop the market from doing what it's got to do there, So I think it's a rather interesting moment. But when you look at the market and you say, is it due for a bounce or is it due to continue? We've erased half of it. So naturally you're gonna have this tug of war. Some people are gonna say, that's it. She's gonna crack. She's gonna fall. That's it. Other people are gonna say, no, we only gave back half the bounce. That's very normal, and we'll just take it from there. So I don't know. I'll take a little more weakness. I don't like when it happens fast, though. When it happens fast, they tend to be shorter lived. I would like if we bounce a little bit and fall again, bounce a little and fall again, and so on. If I could somehow communicate with the market and get it to do my thing there. Hey, in the office trades, by the way, if you weren't there today, we closed out Facebook. We had Facebook short. That worked out for us. We had the Spiders short. That worked out for us. And we had Visa short. That worked out for us as well, so we closed those positions. And we added the TLT CarMax, which is going to be a disaster. I can feel it, but we'll see. We added AMD, and Cody added Cardinal Healthcare short. So we will soon have a way for you to see what we have, what positions there are. Of course, you can, like if you're not in the research site, this is what it looks like, right? So we just show everything. We show the whole account, the profit, the loss, everything that's going on there. So you get to see it in the research site without holding anything back. But if you're on the show here and you're like, I don't know, I see what they're doing, but I don't really want to sign up, that's cool too. We'll have a way to show that. What do you think of value ETFs such as RPV and AVUV? Now? Now is when you say value? A little late, don't you think? And I'm not familiar with AVUV, so I would check the volume on that to make sure there's enough people trading that. Is that a newer one there? Does 900,000, 600. Okay, so yeah, there's enough going on there. Yeah. You just always be careful of new ETFs. I've heard because it's sometimes there's 10,000 shares that have traded, and you're like the only one that shows up. XLU is headed back down to earth. Yeah, bring it back down to earth. So we have XLU short, and yeah, I'll take a drop. That would be nice. Small position, but still be nice to see it fall, and it is doing it. Love it, Richard. Lucas got AMD short. So same thing. Like now? After all this, you now want to be short? Granted, there's no way of knowing that would have happened, so I'm not picking on you for that, but I mean, after having this kind of move. That's one for the research site. What you do is you go, okay, how far was that drop? This drop here was 20% in 12 days. Well, how often does AMD continue lower after being down 20% in 10 days? I'd venture to guess probably not that often. So I would not short it there. Cody Straight Jacket's asking about your Cardinal Healthcare. You short that stock? You are, right? Yeah. Yes. He actually had a little bit of a... I was trying to tempt him with taking a little bit of a profit. He has already collected 19% of the total premium there. It's $112. I was like, Cody, need some money? What you gonna do? We're gonna start paying people in cash. So, because it's technically my extra account, because they wouldn't let me open a business one. So I said, well, if you make some money, we have some fun with it and just pay out cash. But if you lose, you got to give me that cash back. You know. AMD's down. Well, it's down pretty good. Yeah. Lucas thought we were short. No. Now you could pick on me for that if I ever do that. It fell 20%, but now's the time. Now it's gonna fall. Sarcasm, it is. Will the increase in interest rates hurt growth stocks in the long term? What point would you say they were oversold? So you would think it would hurt them more. I'll be honest. It's starting to have its effect, but it's very impressive when you look at some. I'm going to pull up my little thing over here. When you look at some of these names and you go, why haven't they been hit even more? People just haven't given up. I mean, maybe Amazon's already kind of oversold. You got Tesla's more of a news-driven stock these days, but very impressive how all of a sudden these guys, now Apple's not so much in the same camp there, but they're just now starting to respond to these higher rates. Yields are, astronomical, right? We're now, 5.3% on a 30-year? After today, it's got to be. Yeah. So I don't know. You're seeing people unwilling to give up on the top 5 names. That would be Facebook included. And I'd throw in some of the others, semiconductors, NVIDIA and AMD and stuff. AMD's getting weaker, but very interesting. Yeah. They have a little odd scenario there at the moment. Last week's healthcare skyrocketed. Yeah. We talked about that. The healthcare area getting the attention, and after maybe a little bit of a pullback here would continue. So very interesting. Very, very interesting. Yep. Giovanni, Dustin, when you say short is going up, you thinking? No, short down. Long is up, short is down. That is what that means. Trying to figure out some way to play with those ETFs. All right. It bought last GAH. Bought last year, closed. Yeah, 2.25. We're 100% higher than that. Well over 100% higher than that. Yep. Good timing on that one. You got an interest rate with the 2s on it. How do you tell somebody, that's bad debt? You've got to pay that off. If you can't live with it, that's one thing, and you just want to have your house paid off. All right, that's fine. But how do you tell somebody you need to give up your life to pay off your mortgage at 2%? Really? Think about what's happening there. The bank loaned you money and is losing. They're losing on the money. Every dollar you pay back is now worth, 7% less than what they gave it to you at. Why would you give them that dollar back? You know what I mean? That's a tough one. All right, I have, UPS was the one we added on Friday, I believe. I don't want to lie to you. I can't remember if I did that or not. Did I get it? Phil, there it is. Yeah, so UPS, technically we're long on that one. So the order did go through. Okay, sweet. Also, in our research site, we showed you how to use free scanners to find the same things that we're looking for there, so you don't have to pay for stuff. And of course, you can use our research site as well. That's it for me. I have work to do here, so I will get back to I will get back to work. We'll be back tomorrow to do this all over again. Appreciate you guys hanging out. Hope you learned something today. That is the goal. Try to teach you something new every day. So we're going to do the same tomorrow. And yeah, that's really all I got. Enjoy.